All right. Share my screen. Well, good evening, everyone. Thank you for joining. This is our first virtual meetup of the new year. So happy 2023. Happy New Year to everyone. I really appreciate you being here today. One moment. Let me admit this next person. And yes, I'm super excited here to get the new year kicked off. It's going to be an awesome 2023. And I'm so excited to be actually kicking off our meetup for 2023 this year. So for those of you who I have not had the opportunity to meet, my name is Chris Price. I'm the host of the Wealth Mindset and Real Estate Investing Meetup. And I'm also the CEO and co-founder of Red Fox Multifamily, and I'll get into a little bit more of that in a moment. So let me just give you a little bit about us both on both sides of this. So the Wealth Mindset and Real Estate Investing Meetup is open to all who are interested in growing their generational wealth through passive real estate investing and increasing their financial intelligence. This meetup is for the busy professional, people across various different industries. Essentially our group is made up of individuals who make a good living. They have some discretionary income, but they don't necessarily, and they believe in real estate investing, but they are not necessarily interested in being, managing tenants and termites and toilets, as they say. And they are interested in learning more about the proven wealth building power of real estate investing, and that's been also improving their knowledge and skill set of this asset class. So this meetup focuses on helping us all grow, me included, grow our wealth mindset by also learning how to build and preserve our wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate investing as well as other proven ways to build wealth through real work with investors who are dissatisfied with the low returns through savings accounts and funds, and investors who are concerned about the volatility of the stock market. And so Red Fox Multifamily essentially helps partner investors with great multifamily deals to take advantage of this asset class and the benefits of real estate investing, everything from the cash flows to the tax benefits. And in fact, this evening we'll get a little bit more into that. So in terms of the run of the show today, I would like to just ask first and foremost that you keep your line muted. If you have questions, please you can take yourself off of mute, of course. But if you would like to hold your questions to the end, please do so. Because typically I'll answer your questions throughout the presentation. But if you have questions that are just burning, please do stop me and I'll be sure to address them. This presentation is being recorded, and please note that this material does not constitute an offer or a solicitation to purchase any securities. This is for information purposes only and should not be construed as business, financial, or legal advice. And so with that, let me get into today's agenda. Oh, before I do that, folks, let me share one more thing. There will, this is, as I mentioned, this is a great place for us to connect and grow. I love speaking with people about real estate investing and wealth mindset. If you would like to have a direct conversation with me, please do go ahead and shoot me an email. Just at Red Fox Multifamily. I'll make sure that we can go ahead and spend some time and just get to know each other, learn about what you're up to, share more about what I'm up to, and build a relationship from there. So please do feel free to reach out to me. And with that, what I'm going to do in a moment, I'm going to switch over to the presentation for today. And in that presentation, I'll go through, my introduction for those of you who I don't know very well, get into some particulars about me. Then I'll get into the presentation, the details of the presentation. We'll have some time for Q&A, and if available, I'll be sure to hang out for a little bit afterwards to have any virtual networking that we could do. So thank you guys again for the time in advance, and let me go ahead and switch over to tonight's presentation. So, so welcome again. Tonight's presentation is Real Estate Investing Reimagined: How to Recession-Proof Your Retirement with Hands-Off Commercial-Free Real Estate. My name is Chris Price. I'm the CEO and co-founder of Red Fox Multifamily. And so here's what we're going to cover today, guys. We're going to talk about a few key things that I think will be really powerful for you to know, especially coming into 2023. There's so much going on in the markets, a lot of turmoil. There's some things that can really help us all grow and become savvy investors. And that's really what my aim is today, to help us all do. And so what we'll talk about today is the Red Fox Multifamily Real Estate Investing Strategy. We'll also take a moment to talk about that elephant in the room, and I'll get into that a little bit more in a moment. And of course, one of the things that I would love to be able to do as we're connecting here today is to be able to share a little bit about our investor club, our exclusive investor club opportunity for the folks that are watching this now, and of course the folks that may be catching it afterwards on the recording. So again, as I mentioned, this material does not constitute an offer or a solicitation to purchase any securities. This is purely, again, information purposes only. This should not be construed as business, financial, or legal advice. So let's get into this a little bit more. So this presentation is for you if you're a busy professional, if you are interested in a unique way of investing, if you want more freedom through passive income, this presentation is for you. You are in the right place. So it's also for you if you're busy and you don't have time to deal with the headaches of being a landlord. As I mentioned before, dealing with which I've been doing for over 10 years as an active investor in single families, dealing with tenants, termites, the phone calls, hey, the dishwasher broke. None of that is of interest to you. This is the right type of place that you want to be in. If you're tired of relying on the stock market for your legacy and your family's well-being for the future, this is for you. And if you want to look at ways to legally reduce your taxes, this presentation is for you. And so let me tell you a little bit about who we are at Red Fox Multifamily. So Red Fox Multifamily is a leading real estate investment firm, providing busy professionals, fully vetted, cash-flowing investment opportunities in exceptional multifamily real estate markets. Red Fox Multifamily work with individuals who are dissatisfied, as I mentioned before, with the low returns from the savings accounts, the volatility of the stock market, all the things that are going on. You got people, playing games within crypto markets and all sorts of things going on. We are focused on combining our efforts in nationwide operating platform with in-depth knowledge of local markets and capital markets to provide the best investment opportunities available on the market today. And so, passive investing with us really allows busy professionals to diversify their portfolios without the hassles of being associated with being a landlord. As I mentioned before, investing in exceptional multifamily properties across the nation is what we're focusing on. But I'll drill down into that a little bit more because we're really focused on some key markets. I'll talk a little bit more about why that is. This recession-resistant real estate model provides protection, predictable income, and peace of mind in any market condition. So with us, busy professionals have the opportunity to earn lucrative returns at low risk, save on taxes, and reach financial freedom, and create a legacy asset that can be passed on to future generations. And this I'll talk a little bit more about how we founded, but essentially, my wife and I have founded this company, and we're based out of White Plains, New York, which is a suburb of New York City. For those people who do not know, and so let me get into a little bit more about me. So, as I mentioned before, I'm a CEO and co-founder of Red Fox Multifamily, but I'm a pharmaceutical executive with over 20 years of experience. My expertise from the pharmaceutical perspective, it ranges from marketing, medical, and sales operations. Throughout my professional career, continuous growth and development has been extremely important to me. And what I mean by that is I'm a certified Lean Six Sigma Green Belt. I have my MBA in healthcare management. I have my master's certification in applied project management, and I received my bachelor's degree in communications and public relations from Marist College, where I excelled both academically and athletically as a Division I football player and All-American. In addition to that, Marist College is where I met my wife. So many of my dear friends to this day. And our mascot, the name of our company is named. Our mascot is the Red Fox, and that is what we've chosen to name our company Red Fox Multifamily after. So it has a special place in our hearts and where everything started. So when we were talking about what we would call our company, this is one of the key reasons why. So, and this is me and my family. This is my number one reason why. Uh, my number one reason why I invest in real estate and to grow my wealth and my passive income to be able to share that with my family and pass on that legacy. And one of my favorite speakers and authors is Jim Rohn, who many of you probably have heard of. But if you haven't, you can Google him or go onto YouTube and just Google Jim Rohn. But one of the things that he famously said is that a formal education, all those degrees and certifications that I mentioned to you before, those things will make you a living, but self-education will make you a fortune. Okay. And so when I talk about that, I invested substantially in my self-education. As I mentioned, I'm a real estate investor for over 10 years, holding invested in multifamily syndications with over 330 units, over multiple projects. I'm investing in real estate funds, which consist of multiple real estate assets such as apartments and self storage and hotels. And I also own 4+ acres of land in the path of growth in North Carolina. I've invested in several real estate academies and masterminds and mentoring and coaching programs to help me grow and apply my knowledge and expertise. And so this is something that this self-education is something that's critically important. And to that end, what you see here on the screen is me, actually a couple of pictures of me at real estate conferences and educational events. Both happened, in fact, in these pictures in Dallas, which is one of the hottest real estate markets. But it was just a great opportunity to get out there, network, and grow with folks. But on the left, you can see me at Michael Blanc's Dealmaker Live conference, and on the right, you can see me at a multifamily property tour with Rat Sunrock's community at the Rat Race to Retirement event in Dallas. And real estate investing allows me to combine my love of travel with my love of real estate and helping others by providing clean, safe, and affordable housing. And essentially, I'm fortunate enough to do good while also doing well, which is really important to me. And I'm so passionate about self-education that I started this meetup group. And the group again is aptly named Wealth Mindset and Real Estate Investing Meetup to help other people, help all of you learn how they can build and protect their wealth with passive real estate investments. So this is a passion of me, and I hope that if anything, that's coming through the presentation today. And so what I have incorporated here is just a couple testimonials of people that I've worked with. And I'm a person who likes to educate myself on something, and then essentially when I like to do that, and then apply my learnings. And so I love sharing my learnings with others so that they can also benefit in the same way or better than I have, and hopefully faster than what I have as well. And so over the past few years, I've had the opportunity to develop my real estate investing expertise while also developing my financial intelligence and growing my wealth mindset. And I've taken the time to build relationships of trust and communication, mutual respect with the teams that I have invested in with and pride myself on doing so with all the people that I connect with who share my passion. And so, and I constantly share what I'm doing and how it's benefiting me with people in my network. And Shelly, for in this particular instance, is one of those people, those like-minded individuals who had a desire to learn about passively investing in multifamily real estate. And I had the opportunity to help Shelly get her first her multifamily investing journey started. And she's off to an amazing start. And that's been just such a wonderful, rewarding experience to me. And another like-minded individual that I had an opportunity to bond with over real estate is Tamil. And she and I had an opportunity to network at a business function, and she and I began to share our passion for real estate investing. And Tamil and her husband were interested in exploring multifamily space, and they offered to help by sharing insight into my expertise and experiences, and network to help them passively participate in some multifamily projects as well. And so this has been just such a great thing for me to be able to share with other people. And these are just a couple of examples of how I've been able to connect those. So why we chose apartments, okay? So as hardworking professionals in our respective industries, my wife in the apparel manufacturing industry, myself in the pharmaceutical industry, we were really interested in being able to live life on our own terms, and now while building a lasting legacy for our family for generations to come. We weren't necessarily interested in using what we were told were the only ways to build wealth, which was to save, put money in a 401k or an IRA, and invest in stocks and bonds and mutual funds, because we had seen and experienced firsthand the volatility and unpredictability of the stock market. Yeah, admit this next person here, guys. And so for us, here we go. And so for us, we got connected, and we got educated really quickly. And so we studied and we researched the investing patterns of the wealthy. We learned that real estate investing was one of the most common ways people build their wealth. And once we studied that, one of the great quotes that we heard was that 90% of all millionaires became so through owning real estate. And more money has been made in real estate than in all industrial investments combined. And that the wise young man or wage earner of today invests his money in real estate. And that quote actually comes from Andrew Carnegie. And so, in terms of the why behind real estate, we look at it because real estate historically is a stable investment. Investing in multifamily real estate in particular is a historically stable and proven way to create wealth and capitalize on tax advantage legislation. We wanted to get out. We are interested in being able to get out of the rat race. We're not interested in trying to save our way, to retirement and hope that when we are 65, we have enough to make it through the rest of our lives. We are interested in financial freedom and financial independence. We want to invest in assets and create passive supplemental income. We want to be able to have some portfolio diversification and protection from the stock market and its volatility. We're interested in being able to spend more time with family and friends and build that generational that I've spoken to a couple of times already this evening. We're interested in building communities both locally and abroad, which we're also making a broader impact on the world and travel to see more of the world, support our family members. Think about, you guys might be familiar with the TV show Shark Tank. We want to be able to use some of those things and help our family expand into other businesses. And real estate really can is providing us with the opportunities to do those types of things. And we believe that it will do more. So when I drilled down a little bit more into the why behind apartments, I look first and foremost on cash flow and passive income. So investors can receive monthly or quarterly passive income distributions from their investments that get deposited right into your bank account. From a demand perspective, housing shortages, as you all probably have heard throughout the news, have remained problematic. And in some reports, they talk about housing shortages being somewhere or not being able to be addressed. Essentially, the demand not being able to be addressed for up to 10 years or so. And so this has not only been a problem now, but it's worsened in hundreds of metro areas around the U.S. According to many experts. Inflation hedge. When you have shorter terms and multifamily rental leases, this means that average rents can be strengthened or increased by the general partnership to keep pace, with inflation. When we talk about the tax benefits that real estate has that are versus other asset classes, we look at exceptional tax benefits that include the fact that passive income from multifamily investments is taxed at a lower rate than regular income and income tax rates, and also tax benefits are passed down to investors through the K-1 tax filing. So you're allowing you to have your passive uh, gains offset by your passive losses. When we think about why apartments and just drill down a little bit more in terms of the value proposition here, appreciation, we all know that like any piece of real estate, the value of a property should gradually increase over time and increasing the return on investment. And then when we talk about economies of scale, what I mean by that is that investing passively into apartment buildings allows you to scale the number of units much more efficiently than single family units while reducing your risk from vacancy. So when we were on this journey of building our real estate portfolio, going at it single family by single family and building out our little plan around how many single family units we would need and the amount of cash flow that we would need from those single family units to accomplish our goal of financial freedom, that number was daunting. And then the other aspect of this, as I mentioned before, the risk of single family is that when one unit vacant, you are 100, it's 100% vacant. And so floating that for some time until another tenant is in there, those are all things that create risk and stresses that were not necessary, that multifamily, in fact, doesn't necessarily have. And so these larger multifamily buildings allow investors to leverage full-time property management to optimally operate the property. The cost of the property management, repair, materials, think about service contracts, benefit from the economies of scale. And then when we talk about leverage, leverage is a great thing. And so leverage as a limited partner in a multifamily syndication, these passive investors benefit from leverage by pooling their funds with other investors into these great properties. But in addition to that, you're able to leverage the skill sets of the general partnership team that's running that asset. And of course, one of the great things about real estate in general is that you have the benefits of leverage itself, which allows you to put a percentage of the property down, let's say 20% or 30% of down on a property. the bank puts in the set remaining 80 or 70%, and then you control, or we control as an investment, 100% of that property. And then all of the gains from that, 100% of them go to the investors in that. There aren't very many other investments that provide those types of leverage opportunities. So when we talk about the elephant in the room, one of the things that I hear most from talking with passive investors in terms of their concerns is, okay, so this sounds all good, Chris, but how will I get my money back? And that's a fair question because a lot of folks aren't very familiar with that. And what are some of the things that investors do to that put my money at risk that they should make you run the other way? So with they question, is this a Ponzi scheme like what Bernie Madoff was doing, using returns from other investments to pay returns to investors? Is this something like where people are manipulating the numbers to make deals look good? Or think about things for those who may be familiar. Think about the Tyco International scandal back in 2002, where former CEOs and CFOs were basically stealing as much as $600 million from the firm. And then think about other opportunities or in more recent news, just at the end of last year, think about the former CFO of the Trump organization pleading guilty for his role in tax fraud, tax fraud scheme. And then think about more even just in that same time frame. So think about Sam Bankman-Fried, who was criminally charged by U.S. prosecutors in Manhattan, accusing him of wire fraud and securities fraud and money laundering and campaign finance violation. And these things are things that are very nerve-wracking to investors. And so, what are some of the things that investors do that put my money to risk? These are things that we want to make sure that we help our investors know that no, this is not. These are not the types of things that we're involved in. First off, and then second off, everyone is in the right mindset of being able to think about those things because of the environment that we're in. So when we talk about the challenges from the world of passive investing, we talk about this from this angle. Their inaccurate communication and reporting. Are people not communicating in a timely manner? Is there a lack of transparency from the general partnership team? What's going on with the deal as you're getting updates? Are you not? Are you getting updates at all? And then, how do you understand what's really happening so that you as a passive investor are confident all the way along in the investments that you're making? Are they speculative in projections, or are these investments done with the most careful underwriting and conservative approaches to underwriting to protect your principal? And then other things that we talk about here are, are there delays on distributions from these projects? Are they hard to get a hold of the principals that are involved? So you've built a relationship with these folks, you've connected with them, you're able to put your money to invest with them, and then they ghost you, right? You're wondering what happened and how come we don't keep in contact anymore. And then in some situations, I'll speak to this from a deal that I've been in before. Taxes late every year. What I mean by that is you have an idea or you think you're going to be submitting you're filing your taxes during the normal time frame, but you have I've had a bad experience of having a general partnership group from a passive deal that I invested in not give me the heads up saying that early enough to be able to say, hey, your K1 document is not going to be here until after tax filing season. And so you have to scramble to get to be able to file an extension with my CPA for our taxes. And so that's not a great experience. And those things can cause a lot of stress and sleepless nights for folks. And so those are some of the challenges that folks have experience, folks like me have experience with investing passively in some of these things. But from a Red Fox multifamily perspective, our approach is that we believe in a fully transparent investing experience for our partners, where where people and relationships come first. We really focus on monthly communication and visibility via either email and or our investor portal. We want to be able to provide full transparency and consistency around communication. We want to be able to provide direct access to the principals so that you have questions, you get answers, good or bad. Our approach is that we want to find unique advantages, really have the unique advantage of finding deals. We want to be able to get you your tax forms on time, and we want to give you that peace of mind when you make your investment. So our you know basically what I'd like to kind of talk a little bit about here as I get into our unique process for sourcing and evaluating deals is, help you understand that now that we've talked about our specific strategy of our processes for finding deals and what this means to potential partners and what the potential upside and what we do to mitigate risk, let's talk a little bit about opportunity. Let's talk about who we are, who we partner with, and what types of returns there are. So the reason why we share this with you is really because we want to continue building our database of passive investors to provide access to our investment pipeline. That's straight up. And by doing that, it helps you be aware of upcoming opportunities for deals that might meet your criteria to invest in. And so our unique process for sourcing and evaluating deals is in this environment where interest rates are high, we're seeing a lot of owners or sellers not really coming back down to earth after being in such a seller's market over the past year and a half with interest rates being super low. That we say no a lot more than yes. We invest alongside of you in our deals. So it's not you putting your capital forward only. We invest alongside of you. We have strong teams, both on and off site. So, whether it's our third party property management or the asset manager working on our team to ensure that the investment, we make sure that we do that. And beyond that, we work with the best attorneys, the best property managers, the best asset managers and CPAs to ultimately optimize your investment. And we only partner with savvy, experienced investors. We are backed by mentors and advisors with thousands of units and hundreds of millions of dollars of assets under management. And we do not play guessing games. We have to stick to the numbers. And if it doesn't pencil out and make sense, then we walk away. There will be other deals that do make sense for our investors, but we're not chasing deals to just get in a deal. And so just to get a little bit more specific into the types of deals that we're looking at B and C class properties with 40 plus doors. Our target markets include landlord-friendly states with strong business environments, positive population growth, and rent growth trajectories. So think about places like Texas. Think about the Carolinas. Think about parts of Ohio. These are really great markets to be in for those reasons that I mentioned. And our typical projected hold time is about 60 months. But however, this can be earlier if the property is refinanced or there's some other opportunities that get evaluated that allow us to refinance or sell the property sooner than look, the way that we approach this is that your bills are monthly, so we aim to deliver monthly distributions for our investments. However, we do understand that in investing in some cases the returns may be on a quarterly basis, but investing in quality real estate assets is especially prudent during times of recession, because as we have discussed before, real estate is a hedge against inflation. It is a stable investment. We do have an appreciating asset in these times of a recession. There's a strong demand for real estate. And of course, as I mentioned before, there are very few assets with as strong a tax advantages as real estate. So let me take you through a couple of deal examples here so that you can kind of see the types of things that we have looked at. Essentially, what I want to be able to do before I get into that is that, these are some deals that I've invested in, and I want to be able to help you understand a little bit of the key investment terms for those people who may not be familiar. So you're going to see terms like cash flow. Cash flow is essentially the total income minus the total expenses. The cash on cash return is going to be the cash that is received divided by the cash invested, and that's also known as your ROI. Um, we're going to hear terms called the average annual return. That's your total returns divided by the years of the investment. You're going to hear terms like total return, uh, your cash flow, and the profit from the sale or the refi equals your total return equity multiple. One of my favorites. This is the total cash distribution divided by the equity invested. So I'll show you an example of that. But think about if you put in 100K and you have a 2x equity multiple, you double your money. So that's a way to look at it there. And then internal rate of return is another common metric that's used in real estate investing. And basically, IRR, as it's commonly known, looks at cash flows. It sums up all the cash flows in an investment and averages them out. And then these cash flows include rental income, the principal reduction, the cash flow at the sale of the property, and any money paid to investors, and incorporate the time element in there. It gets super complex, but the point is that you'll see this commonly referred to as IRR within real estate multifamily deals or syndication deals in general. And this is a number that's typically represented as a percentage. But I just wanted to give you guys a little bit of an example of some of those things, of the flavor of the terms, if you will, before we get into some specifics. So this property here is a property we invested in the Atlanta metro area, and one of the key reasons I should say plural why we chose this deal was basically we had it was a 243 unit deal and with strong market, with job and population growth, an opportunity to increase the rents $500 plus per unit. There was some new property management that the general partners on this deal had, and they had new on-site security, and they had a whole business plan that was going to be executed, as well as the location of this being in the immediate proximity of a golf course that was developed in a whole developing area around it. It made this a very attractive investment for us. What was also attractive were some of the projected returns to the investors. So we were looking at a 9% cash reserve return, a 15% average annual return, almost doubling our money. Rounding up, the equity multiple 1.87. So essentially, that means that in the $50,000 investment turns into 93K, and then that holding period was 72 months projected for this deal. Another deal that we've invested in is Coral Bay Apartments and Townhomes in Houston, Texas. Shout out to anyone in Houston, Texas. Dialing in this evening. We chose this deal. This was a 41 unit deal. Again, Houston's one of the best job markets, strong population growth, very diverse economy. Everything from a wonderful class medical center to Microsoft to NASA. a whole host of other economies that are there. But this has a new first-class property management. I mean, this property management firm that is running this really takes care of the residents of the property and run that property so that it optimizes free dime and nickel that comes along with it. And in addition to that, the team invested over $2 million making exterior and interior improvements, which really helped to improve the property overall. This deal similar to the last. It's not a copy of the previous screen. It's just again our investment criteria. Is very consistent. So we were looking at 9% cash on cash return, a 16% internal rate of return, an 18.5% average annual return, and again, rounding up an equity multiple of about 2. So that $50,000 investment turns into 99,500 in about 50 months is the projection there. And then the last example that I'm going to show you this evening is on Pearl Valley, which is in the Birmingham metro. This property is a 48 unit property, which I'll get in a moment. But this was looking at 8% cash on cash, about a 2. That's equity multiple, as you can see, which would turn 50K into 98. You have a 13% average annual return with a 60-month holding period. But here's the deal. This is a 48 unit apartment complex and again, Birmingham is also a very landlord friendly, very strong business market, a lot of great things going on in the market. But let's talk a little bit about the business plan here, because one of the things that I was really attracted to in this particular deal is that the sponsor, it is a vertically integrated company where the sponsor owns the property management company that offered quality services and better cost controls for the investors coming in, better services for the residents of the property. But in particular, the business plan here was looking at being able to execute a water conservation plan. So this included replacing high flowing toilets with low flow toilets that reduced the water expenses dramatically, and included, changing out the light fixtures and throughout the entire complex to lower the energy costs substantially, as well as making some other improvements throughout the property, things from air conditioning units, etc., to make the property run more efficiently while also increasing the income of the property by increasing the rents of it as well, which was really attractive to us. So this was a solid deal. So these are the types of deals that we invest in. And so if this seems like a fit, collectively for you, what we like to be able to do is offer you an invitation to join our private investor club. And essentially what this means is that being a part of our club, essentially our private club, it will make sure that you receive helpful information about multifamily real estate investing, email communications that you'll receive, newsletters, or not newsletters, but articles that can help you inform your investment approaches and your investment decisions. And also provide you with an opportunity that has an invitation only access to our deal opportunity. So in other words, when we identify an opportunity that may be of interest to you as our investors, you will be on that list of investors on our investor club, and we'll be able to communicate that opportunity out to you. And then from there, in understanding that deal, you'll be able to. We'll have investor presentations where we bring on the sponsors of the deal to take you through the details, one-on-one conversations as needed. Recordings of the presentation so that you can evaluate each deal and determine where and how you want to invest. And then, joining our investor club, what it means to you essentially is this. It means potentially lucrative returns. We do work on a first come, first served basis. So, if deals get filled up, and you're not able to get in, there will be others, but we have to work that way to honor that for the investors that come into the club. We focus on investments with minimum of $50,000 um, investment, but investors should know that this can include self-directed retirement accounts, either self-directed IRAs or single 401ks, or EQRPs, and also what they're more commonly known as. You can invest with those. Equity, joint ventures with other partners. There are folks that invest with cash value life insurance. These are the types of things the types of ways that folks who join our investor club will be able to leverage these assets to invest. So if this sounds like something that seems right for you, or you are curious about learning more, I'd love to offer you a complimentary call to just really get connected. And what I want to be able to do when we speak is answer any questions you may have about this asset class. There are no obligations. It's just an opportunity to connect. You and just an opportunity for you to get to know me a little bit more, for me to get a chance to know you a little bit more, and then we can kind of go into any other details from there. But really, if you're interested in learning more about multifamily real estate investing, I want you to go to our site. It's rootfoxmultifamily.com/consultation to book a call. This, I'm going to actually pull it up on the screen here so you can have a look. And I want to thank you all for taking the time um, to to hear my presentation on how to recession-proof your retirement with hands-off commercial real estate investing. And I look forward to speaking with you soon. So with that, I'm going to stop the presentation and take any questions. And I think I saw something come through the chat here. So let me pull it up. Oh, so there's a question from Jesse, which is a great question about how many deals do you usually offer a year? Are they all multifamily? So Jesse, great question. So really, there's not I cannot speak to a quantity of deals per year. The reason why is because each deal gets evaluated on its individual basis, and some deals work, but the idea is that what deals that meet our criteria, that we know will be of interest to our investors, that we've spoken with and we've built a rapport with, and we know what they're looking for. Those are the types of deals that we will put out to our investor club. Everything from the markets to the projected returns that they're interested in, to the length of the hold. Are folks interested in deals that have a strong cash flow, or are folks looking for deals that have maybe a larger upside? Like, wherever you live, if you're in a solid market and you want to invest in that market or somewhere else, and you know about that because you went on vacation there, and it's a hot market, and that deal is going to be the deal for you. And some people like to invest in those deals because they know, hey, this is going to be a solid deal. When they sell that baby, it's gonna really have a great benefit for me as an investor. Some people look for that larger appreciation play, and then some people look for a blend of both. They have some strong cash flows from the property, and then some, but they also know that the upside when it sells also is really solid. And so those things are the things that we consider in terms of who we partner with to bring deals. In terms of the quantity, I don't have a specific answer for you on that. But in terms of the asset class, yes, excuse me, we are currently entirely focused on multifamily investing. The and I'll get to the other asset classes in a minute, but the primary reason for that in our conservative approach is that we believe, housing is an essential. Thinking about Maslow's theory, having a roof over one's head is something that's critically important. And when people have to make trade-offs on things, a roof over their head is not going to be, well, it's going to be the last thing that they choose to jettison. Whereas other things that are attractive to us, things like self-storage or things like hotels, you know, those things from our conservative approach, what if there is another COVID pandemic and travel all of a sudden dries up and people aren't staying in hotels? How attractive does that become? When I think about investments like self-storage, if I'm downsizing and, I can't, keep up with if I'm I have a self-storage unit that I'm using and I don't necessarily need to keep it anymore from cutting expenses because it's a recession and times are getting tough. Um, I have a choice. Do I, get my, keep the roof over my head, food, my medications? Okay, I got to trade off somewhere. Maybe I don't know where self storage fits in with again the priorities of those things. So our philosophy, those asset classes are attractive to us, but right now we are focused on multifamily, and at some point in time we will evolve into other asset classes. But right now we're focused in on that asset class. But great question, and thank you for asking. Um, and then there is in terms of investment strategy. So, Venpada, I hope I pronounced your name properly. I think you left the chat, so I can't get any clarification on that. But I'm happy to take any other questions, either by chat, by um, by message here. So I see, yes, Matt, great question. So we work with both accredited and sophisticated investors. But you must know, as you asked a very intelligent question here on this, certain deals may only, there's certain limitations around deals that are offered or to sophisticated investors versus accredited investors. So we do work with both. Our primary audience is focused on accredited investors, but some of our deals we will work with both accredited and sophisticated investors as well for both 506B and C. So one of the things that I like to do, and that I do, and you guys will see this is our first meeting of the year, but we'll have two meetings generally per month. And so one of the things that you'll see me ask the other investors or service providers that come on to the meetup is, I put them in the hot seat for a little bit, and I will ask them a couple of key questions. I'll ask them, one of the questions that I like to ask them is, what does financial freedom mean to you? And so I'll share with you guys a little bit, about what I was sharing during the presentation. Financial freedom, to us means opportunity. It means an opportunity to make choices on what we do and how we do it. In other words, as I mentioned before, it allows us an opportunity to live life on our terms. It allows us to be able to travel and do things that without that financial freedom, it makes it a challenge to do so comfortably. And so we really are passionate about this, and we're passionate about helping others experience this through real estate investing as well. As I've been on this journey as an investor and growing my knowledge in this space, it certainly has dawned on me that of how much how ubiquitous, if you will, things like investing in the stock market, using your 401k and IRA has is within our society, and how commonplace it is to talk about those things. And when it was only a few years ago when I learned about what a real estate syndication was, and I was like, well, why and how could this be? And that was just a climb to me that this was out here. And as I mentioned during my presentation, once I got into it, I applied it, and I learned, how this works, and it became a passion of mine to be able to connect with folks like you, to share this information, to help other people know that there are other ways for them to grow their wealth for themselves and for their families. And so financial freedom is really important to me and to my wife Allison, and we want to be able to create it not only for ourselves and for our families for generations, but for others as well. And so I also asked investors, what are what some of the best trips that they've taken, and I have two that I want to share, and I'll share a little bit about why. So one of the greatest places that I've been able to go with my wife, this was before children. I say BC. We had a whole South American tour. We went to Rio de Janeiro, Brazil. We went to Iguazu Falls. We went to Uruguay and Paraguay, and we went to Argentina at the end. And this was just such an amazing trip to learn about the culture and of all these different countries, and have a great experience there. But what's cool about it when we travel, and now we pass this on to our kids, we try to do what the locals do and be a part of we don't like to go to all the commercial touristy spots. We try to be a part of the community we were as if we were residents there, and we took the tips and we followed the local stuff, and that's just a great experience. The other trip that I would share with you was actually a trip we had just the beginning of last year. We brought the kids for the first time to Disney down in Florida. And when I tell you that my wife and I enjoyed it more than our kids, I'm not lying to you. This was a great experience, and with our kids had a blast too. But I mean, it was such an awesome thing. Disney truly is a magical place, and you talk about first class experiences. There are few. There are few companies that do better than what Disney does in terms of about providing a wonderful customer experience. Um, so I hope that made a couple people smile out there. The last two things, guys, is in terms of things that we're working on these days, and really what I'm working on is making sure that I can provide great education to this network here that we have in our Meetup community. And so both through educational events like this, as well as being able to spend some time to have more, quick sound bites, email education as well, things to kind of give you a beat on what's going on in the markets, what markets are hot, what markets are not. What are some of the just common things to help you grow your wealth mindset, as I mentioned before, and develop is something that's passionate to me. So those are some of the things that I'm working on today, and just keep trying to bring value to you all is really what I'm committed to. And I hope when you guys see when you see the communications from me in your inbox, or these videos that we post on our YouTube channel, so that you can refer back to them, share them with your friends, help them grow their wealth mindset as well. And then lastly, when I ask people, what does having a wealth mindset mean to you? Really having a wealth mindset means having an abundant mindset. It means being able to approach this, with open eyes and open arms, and being able to really you know, think think abundantly and grow and approach things in a way that that really are about adding value, growing your knowledge, growing your expertise, and being able to take that, apply it, and being able to share that with others. It doesn't mean anything if I soak up all this information or the other guests that I have on this meetup, where we all are sitting in our comfortable homes and doing these things, and working on individual wealth building, but we don't share it with others. That's pretty selfish. So having a wealth mindset, to me, means having an abundant mindset, and that abundant mindset means being able to take your knowledge, share it with others, and help them achieve levels of success faster than you, better than you, so that they can continue to pass that wealth mindset on. So with that, guys, I hope that provided you with a little bit of insight into who I am, who Red Fox Multifamily is as an organization, what we are about from a wealth mindset and real estate investing meetup. I look forward to connecting with you all at some point in time, um, and just having some great conversations. If you don't have any other questions, I know I'm just a few minutes over here. I want to thank you for your time this evening, and I'll ask you to please reach out and stay safe this year and make 2023 great. So have a great evening, everyone. I'll hang back for a few minutes if you have any other questions. Thank you.